Hello and welcome to this final session of the ACT Cash Management Conference. And we're going to talk about the future of cash management in the 2020s. I've got a fantastic panel lined up to speak with you today. So I'd like to introduce them to you. But just a reminder before I do that, do get involved in the Q&A. We'll be taking questions throughout the session and at the end. So do put your questions in there and also get involved in other areas of the platform, discussion forum and going onto social media, etc. But without further ado, I'd like to introduce the panel. You've got their bios on the platform already, so we're going to just ask them to say a little bit about themselves and a little bit about something personal that you may not know yet about them. So I'm going to start off with Bente, if I may.
Hey, hi, I'm Bente Salt. I am Group Treasurer at Rentokil Initial, FTSE 100 company, dealing in pest control and hygiene. And I was sort of torn between two things that you might not know about me. I'm a beekeeper. And also, this is only the 6th time since the start of lockdown that I've worn makeup.
Very good. Thank you, Bente, for that. That's great. Karen.
Hi there. My name's Karen Braithwaite, and I'm the Global Head of Transaction Banking at Barclays. I think, like Bente, I can beat you there. Actually, I think I haven't even done it 6 times. This might be the 2nd time. So I think for me, one of the things I've actually learned about myself through the pandemic is that actually let's appreciate the small things, because actually they're the big things. And one of the things I've learned is that my little girl who's 6 is a super hula hooper, and I'm basically never going to be able to hula hoop ever. So that's something that I now know about myself, and now you know as well.
Thank you very much for that. And moving on to Kevin.
Hi, Caroline. I'm Kevin Cook. I'm one of the founders and the CEO of TreasurySpring, London-based financial technology company helping our clients to minimize risk and maximize returns on their excess cash balances through our unique fixed-term fund platform. In terms of things about me, I'll follow the theme of saying 2, one of which I'm embarrassed about and one I'm not, and I'll let you choose which of the 2 it is. So one is I actually started life as a lawyer before moving into this, and the other one is that I didn't wear a pair of trousers, only shorts, from March until September last year.
Only short, and I'm not going to go into that any further. Stop, Caroline. Viktor.
Hi, Caroline. Hi, everyone. My name is Viktor Mura. I'm a head of treasury and tax at WizzAir. I didn't wear any makeup during COVID, but probably more importantly, I'm quite passionate about getting on a plane again, like similarly to our passengers once the lockdown released.
Thank you very much, and thanks to all panelists for revealing a little bit about yourselves. So we've covered off quite a lot over the past 2 afternoons, whether it's about the changing payments landscape, cybersecurity, COVID and Brexit impacts on the economy, or indeed APIs, the evolution of TMSs, central bank currencies, LIBOR transition, you name it. So let's stand back a bit, look a bit big picture at cash management overall. And I'd like to start off by asking Viktor, how would you describe where we are in terms of cash management? And more importantly, what are the key areas of focus for the medium and long term?
Thank you, Caroline. I think this crisis is unique in many senses. And one of those is that many stakeholders would look at the strength of the balance sheet of a company as a proxy for how the company is managed. So the role of treasurers for this crisis around has increased a lot, and they had really a role to play here. Having said that, liquidity management as such, I would expect that will remain a crucial theme. It focuses on the basics like cash visibility, cash flow forecasting, working capital management, and you can argue that this is kind of basic stuff, but still for a lot of companies out there, to get these fundamental building blocks right is something key to successfully navigate through this volatile environment. And if I have one step back, just look through the woods, as we would move out from kind of the crisis mode and the world would get back to something that is considered more normal, I would expect that we would have to continue to take the momentum on developing our people when it comes to they are the most important assets of ours, and they have been and they will continue to do so. So, I mean, they rightfully challenge us to embrace the digital transformation with the purpose of creating a more meaningful working environment and job for them. And I think every employee shall take the lead on this and challenge their managers in order to create the space for them to grow in their current role. Digitalization and automation are the key enablers there. But I would think that what is probably even more important, that this transformation should happen in a consistent manner and with output that is kind of measurable and tangible at the end.
Mm-hmm. Well, thank you very much, Victor. Bente, as another treasurer, how would you respond to those points that Victor's made?
Well, I think I'm with Victor on those ones. I guess if you lived through the 2008-2009 crisis, you could kind of plug in to some of the tasks that you did at that point in time. So, you know, for instance, in Rentokil, we drew down all of our RCF and we applied for the Bank of England CCFF because I think there was worry that it was going to be very similar to what we had in 2008 banking crisis. There was doubt about maybe the bank stability, but I think we came out of that quite quickly and realized that actually the banks were pretty well funded this time around. So the 10 or 12 years in between the last crisis and now, you know, a lot of regulation has gone in, the banks were shored up, and I think that has certainly, that got us through this particular one. Within corporates themselves, there's still the same focus on forecasting, making sure that you got enough cash to survive, and basically just complete focus on liquidity. That has been my biggest issue throughout this. You know, at the start of the pandemic, we put in place 13-week forecasting for every single country that we have. So there was 85 forecasts. We sat through 85 sessions every week, going through each country, making sure that, you know, they were not going to run out of money in case people could not get into the office to pay things. And it's highlighted in a lot of countries, we are still very reliant on paper payments, and that's very, very tricky. So there's been a real big drive on trying to move people electronic.
That's really interesting. And I think your point about the global crisis, it's really, really interesting, because we've complained for, you know, over a decade now about all this regulation and how irritating it all is. But now I think we are all saying we're very grateful for it, because the strength of the banks is what has carried us through this. And on that note, I'll move over to Karen for your comments.
Yeah, thanks, Caroline. I mean, I couldn't agree more. And all the work that's happened since the last crisis, I think, has meant that the banks have been in a position to be in a more supportive and collaborative role through this crisis. So certainly going back to the original question, I mean, you know, through the pandemic, I think it's fair to say that we've seen that the role of the Treasury function has proved more critical to a company's success than ever before. I personally have huge admiration for people that carry out this role. And frankly, I've been really humbled through the past year at the way they've responded. I mean, just hearing Bente there talking about 85 sessions a week and the kind of the work that's gone into that is just incredible. Yes. We know from our clients that the key areas of focus have remained the same. So, you know, again, as my colleague said, it's on liquidity needs. It's a focus on what's happening in relation to FX volatility, external funding, and that ever-present threat of cybercrime. It's all still been there for everyone to manage. But in that mix, and Viktor mentioned this, we've seen a need for improving cash visibility coming through as a really key priority. I mean, it was a case before the pandemic, but the events of 2020 have brought that even more sharply into focus for us all. And what we saw was that managing through unpredictable market conditions needed more than ever timely and accurate data to enable real-time decisions, to avert pressures on near-time cash flow, and then enable treasurers to provide medium and longer-term strategic advice to executives and their boards. We saw, cash flow forecasting models being tested to the max, frankly, because there was disruption to patterns in supply chain and working capital cycles that we were familiar with, and we were having to get used to new patterns of behaviour there. And then overlay on top of that, the fact that events increasingly have a global impact, and we saw that completely through the pandemic this year. So the need for a sort of broad-based visibility across worldwide operations was also what was coming through for us. And then if I can just pick up on this digitisation piece, we know that many clients have been on their own journeys investing in automation and digitisation, and so have the banks. And what we saw through the pandemic was an increasing number of clients working with us digitally for the first time. So really, just having to get on board with that. And for others that were already working in that way, we saw adoption rates of digital solutions almost double in a matter of days. Clearly, primarily driven by the need to work without physical documentation, folks working remotely, etc. So I think a key message for us has been that digital solutions are and will continue to drive the real-time information and quicker decision making we need to drive benefits, and we need the banks and the clients to work together jointly on that over time.
Absolutely. It is a real collaboration, isn't it? And talking to each other and understanding, each other's situation is really, really helpful. And I think somehow, in a strange way, one of the benefits of COVID has been, I think people have got closer together, and where people have a good bank relationship, which I'm sure they all do with you, Karen, then it's something that it will really continue in the future. Because it's when you support each other through these difficult times that those relationships last into the future. But I'll move on now to Kevin, because Kevin's obviously got many clients and he's seeing a lot of different things going out there. So Kevin, what are your thoughts?
Yeah, so I mean, just picking up on the things that people have said previously, which is we haven't seen things fundamentally done differently in lots of cases, but what we've seen is a focus on resilience over efficiency. Definitely, people understanding that balance sheet resilience is critical in times like this. And I think there were probably a few people who were caught out and a few people who were well prepared previously, and that stood them in very good stead. Again, just picking up on Bente's comments on the 85 cash flow forecast, I think that doing stuff like that is forcing people to realise that doing these things manually is probably not the way forward, and trying to find new digital solutions is probably a decent idea, whether it be in cash flow visibility, cash flow forecasting, payment authorizations, whatever it might be. I think that there's a real view from people that now is the time to engage with the digital solutions that have perhaps been sat there as a nice to have or something I might get to at some point previously. And I think that the other thing for us is that we saw almost 10x growth in assets on the platform over the last 9-10 months, and a lot of what was driving that was changes in rates, changes in people's perceptions around things like the money market fund industry. So I think everybody agrees that the banks came through this time really nicely, and all of the reforms that were put in place post 2008 under Basel III served to protect them really well. Money funds, I think, perhaps not so much. I think there's a lot of concern from the regulators that they acted as an amplifier of the crisis rather than a shock absorber, as they would like to have done. And it looks very likely that there'll be a further round of reform of those money market funds over the course of the coming years. And so I think there's all sorts of patterns that are forcing digital adoption, whether they be out of improvements or necessity. But one way or another, I think it's definitely going to be a more digital world in a few years' time than it is today, and certainly has been in the past.
Absolutely, and that acceleration we see in other areas as well. So, for instance, ESG, environmental, social, and governance. I just wondered if I could stay with you for a moment or two, Kevin, and get your thoughts on, what are the challenges and opportunities of ESG in its broadest sense, I guess, that you see.
Yeah, so ESG is a fascinating one. So we have lots of corporate clients. We also have clients from other sectors, whether they be fund managers or charities or what have you. And I'd say pre-crisis, there was a lot of talk about ESG. But if I'm honest, our internal perception was there was a bit of greenwashing or ESG lip service that was going on, certainly in some quarters where people were doing what they felt like they ought to do in order to keep up appearances for the press or market perception or what have you. I think across all of the sectors that we talk to, that's very much changed through the pandemic. I think people are starting to get really serious about it, really understanding that this isn't something that's going to go away. It's a trend that is absolutely going to continue. We've seen from clients both on the cash investing side wanting to understand the ESG qualities of issuers that we have on our platform, and also on the issuance side, we've seen banks and corporates trying to understand, okay, how do I make sure that that this is an ESG friendly or a green friendly issuance, both because that's the right thing to do, but also because ultimately there are pricing implications for it, and I think that will only continue in the future. In terms of challenges, as with any new movement, you end up with difficulties of transparency, difficulties of standardization. And I caught the end of the previous session where they were talking about lack of standardization in APIs and that being a hindrance to broad adoption. And I think ESG is no different. At the moment, people trying to understand, firstly, should I use MSCI? Should I use Sustainalytics? Should I use some internal model? Should I use some combination of the three? What do each of those mean? What's the weighting between E, S, and G? Probably lots of companies have been focused on governance historically as something that was core to what they did. The E and the S a little bit less so. So that's, I think, what we as an industry have to do over the coming years, is to really work together to listen to all of the market participants and to try and understand what can we do in order to aid standardization and make sure that all stakeholders really know what they mean when they're talking about ESG.
Yeah, I think there is a need for discussion, and it's like a lot of terminology I find, particularly with acronyms or difficult words like blockchain, as it were. It puts people off to, it prevents them from really understanding what is it all about, and then they get to a point where they're too nervous to ask, what do you mean? Because everyone's talking about it as if everyone knows everything about it. And I do worry that sometimes people who are a little bit later to the party, because maybe it's not been so relevant for their business, and that they're not getting the knowledge that they need to have about it. So obviously it's great to have you guys here to talk more about it and help our audience if they need that. So I'll move on to Karen now and just say, are you seeing a similar shift or anything you'd like to comment?
I think Kevin's absolutely right. There's definitely been an increase in momentum. I think for me personally, I've definitely seen the S, so the social component, come through. So this idea that it's about doing the right thing. Kevin's also right, there's been more focus on governance. So we're seeing an increase on the E and the S, definitely. I mean, certainly from a bank perspective, and not just from Barclays, but more broadly, we see a significant opportunity in the transition to a low carbon economy. And we can achieve that in a few ways, actually, and are on that path very much. So first of all, strengthening relationships we have with clients already as we help them adapt to what the new world looks like. And then building new relationships with a number of innovative, fast growth organisations that are developing really exciting new green technology. And then thirdly, by working in partnership with academics and industry associations to shape the latest thinking and learn from the experience of others. We really do have to go on this journey together. And what we're seeing from a client perspective is that that focus on environment and sustainability is being embedded further into corporate strategy. But some of the challenges they're facing is around sort of required disclosures and the standards around that, and then lay over that the shifts in technology and the asks from investors. Kind of how do you, to your point, Caroline, simplify it and make sense of it? So, for example, we know the task force on climate-related financial disclosures. I mean, there's a jumble of words in of itself. It's going to become mandatory for large companies and asset owners in the UK by 2023 to make disclosures. So finance teams will not only be called on for financial disclosures going forward, they're going to have to make disclosures in relation to ESG. In terms of the opportunities that we're seeing coming through, the use of green and sustainable products in financing, or even on the other side of the balance sheet when considering sort of cash deposits, is definitely becoming more relevant. And what we're seeing is that Treasury teams are using that to embed themselves in the broader strategy of their organisation. So they're really driving that discussion with their business units, and they're able to deliver on the goals to actually, they're coming together to actually deliver on the goals around this. And we're also finding that companies are seeking to use green and sustainability financing after they've then established that strategy. And that's providing a really clear signal to their stakeholders and investors actually around their company's priorities. So there's lots of opportunity here. I think what I would just sum up and say is that I think the profession of banking has a really unique role to play in positively impacting society and helping to preserve the environment. So it's fundamental to certainly to my belief as a banker that we can and we must do business in a way that is good with our clients. And to your point, it's about really continuing on that path of a really strong working relationship.
Well, thank you very much, Karen. So the relationship with the Treasurer, let's move to a Treasurer now and ask Viktor for his thoughts on ESG.
Yeah, if I may, I would take probably a narrower perspective on the wider as well. So the narrower is obviously with the momentum around the ESG. That is the reason behind the financial performance for the investors to invest into a company and the company to get investment. Having said that, there are still many market participants that are trying to create business out of it. So I think at the end, what really matters that participants and stakeholders should promote those businesses that do meaningful things when it comes to ESG and in the context of ESG. And you would argue that there are kind of hundreds of things or items that you can promote, but the question is what are those that really matters and really drives the world to be a better place. I mean, I'm here to represent an airline, so obviously the environmental impact of such is something very, very important. And having a fleet that is the youngest is something that is very in the core of our heart and operation. When it comes to the profession, I think both treasurers and bankers have to promote transparency in this field, both for internal and external stakeholders. And beside that, I think that when it comes to ESG-related products, we have to have something that is focused and ultimately honest.
Absolutely. It's interesting as well, you touched on industry, and we were talking in an earlier session on cyber currencies and so on. And the complexity of everything, we might say, airlines, obviously carbon footprint can be a problem, etc., etc. But there's a lot of talk around technology and the carbon footprint of technology, which is a kind of almost a hidden thing. We think, oh, it must be clean, and actually it's using huge amounts of energy. So we had a little chat about that earlier on if anyone's interested, if they didn't see that session. But I'll move on to Bente now for your thoughts.
Okay, so at the moment the focus is very much on a carrot to bring corporates in line and do the right things from the E and the S perspective. So you get lower coupons if you issue an environmental or green bond or a sustainable bond. And I think in time what you will see is that it will switch to companies or corporates that are not green or doing something socially right, that they will get a step up potentially on their coupons. I also think that the banks may change the way that they bank corporates, that they probably will not want to be seen banking corporates that are not doing the right thing, and that could push some corporates into lower rated banks potentially. And personally, I worry a little bit about, there's a lot about carbon neutrality and carbon credits out there at the moment. And would that mean that, the developed countries will potentially look to offset their carbon footprint in the more developing world, and will there be losers on that? I mean, that's just a personal worry that I have.
Yeah, no, it's a good point you raised, and again, it's the complexity. Once you start to look into things, is that they're not so straightforward, are they? Bente, could I stay with you to talk a little bit more about the role of the Treasurer, and do you see that changing, and do you see that having an impact on cash management strategies going forwards, or not?
Personally, no, I don't think it has changed significantly. And we talked about this some time ago. I actually went back 10 years and looked at what what we were talking about at the ACT Cash Management Conference 10 years ago, and it was cash visibility, pooling and forecasting. Now there we go. It's the same again. we are broadly doing the same thing. We have some systems that's become more powerful, but I still think technology has not come along as fast as everyone said it would. All of this stuff about big data, APIs, and I know there was a session on APIs earlier. I haven't actually seen a lot of that materialize. It would be nice if it did, but yeah, we are being asked for more data, and certainly in the pandemic we've been asked for more data. But I think a lot of corporates still struggle with the good old Excel treasury management system. I don't think that has changed significantly.
Well, thanks, Bente. Victor, would you agree? Is the role not changing, or do you see some changes?
Yeah, I don't think it has changed fundamentally. I mean, the treasurers are the product of crisis, and we had quite a few over the recent 2 decades. And I would argue that, I mean, continuously adapting to this kind of ever-changing environment was something that we had to kind of develop new competencies and polish those to perfection. And there was some evolution of those. So it started with risk management, then we had to do the digital transformation, then this time around liquidity management became more important, at least for the aviation industry, than ever before. So I don't think it has changed fundamentally. I think the focus has probably diverted to the extent that learning is important, but when it comes to execution, being bold in execution is something that is really important now as we face a more uncertain environment. And you could argue that the level of uncertainty, I mean, out of the crisis period is also higher compared to like a few years before. So we have to be better in adapting to these ever-changing circumstances.
Indeed, and I know of organisations that have basically never had to worry about cash at all, never had to really have never having to do forecasts, in fact, and now they've had to change. So whilst it may not be a fundamental change to their role, what they're trying to achieve, what they're actually busy with now, and the focus, as you say, has changed quite radically in some cases. But let's see, Kevin, you talk to lots of treasurers. What's your objective view, looking from the outside in, so to speak?
Well, I can hardly sit here and contradict Bente and Victor and say the role of the treasurer has fundamentally changed. But I guess what we see is, again, we operate with work with companies ranging from the very large down through the SME sector, and I think it's not uniform across our clients. I would say, if you're in a large treasury team like Bente and Victor, the role of the treasurer is probably fairly well defined. And well bedded in over a decent number of years, and certainly I think, as is ever the case in a crisis, as Victor mentioned, suddenly people start to really pay attention to treasury, whereas perhaps in more ordinary times it's allowed to run along. But in some of the smaller companies that we work with, where you might have FDs or nascent treasury departments that haven't been around for quite so long, I think the role of the treasurer there perhaps is changed. We've also seen a number of clients really putting in treasurers and hiring treasury folk into businesses that you might not ordinarily have historically expected, for the same reason you mentioned, Caroline, which is suddenly people are like, wow, I really need to pay attention to my cash flow, to my liquidity, to my credit risk, to these things that have been kind of just an incidental to the main business for such a long time. But it often takes a good crisis to kind of shake people a little bit and wake them up and say, okay, now I really do need to focus on this. And I think even with the larger treasury team, sort of coming back to that digital adoption point, it's often necessity is the mother of invention. So, why would you put something in and change the way you're doing, even if it's just suboptimal, unless you absolutely have to. In our experience, treasurers are generally resource constrained. They're not happily sitting there working out what the next projects they're going to work on that can add the most value over the next 6, 12, 18 months are. They're sort of working to make sure that everything operates on a day-to-day basis, and that they're able to sort of keep the plane flying. But I think when things start to break is when people start to say, okay, that's not just suboptimal, it's really problematic. And that's where I think that there is perhaps a slight change in role, because I think, again, this sort of stuff feeds on itself. As people do start to adopt digital and start to see the value that it can bring, I think that they'll be more open to other digital solutions. And also, if the digital service providers are doing their job properly, then they'll be saving the treasurer's time, which will mean that there is time that's freed up to look at other digital solutions. So I think it really can feed on itself if the industry gets it right.
Oh, absolutely. Thank you. Karen, your thoughts?
So I'm just being reminded I'm on mute, apologies. Yeah, just like Kevin, I'm certainly not going to disagree with Bente and Viktor about whether they think their role is changing. Because I agree, it isn't. There is fundamentally what they need to do is still the same. However, I think the way that role is actually going to shape up and the way they do their job will change. And we have seen some of that through the pandemic in relation to the role of technology. And that's what Kevin was alluding to as well. So, and you're right, there's a very broad spectrum here of some of our clients that have never interacted with us digitally before. And they've just had to, frankly, to support and sustain remote access for their staff, for example, working remotely. And then needing that access to real-time information to help them manage in uncertain times. There's definitely been a desire and a push from our clients that we hadn't seen before. I think, to be honest with you, one thing the pandemic has done, and I'm not suggesting for a minute that we want a pandemic, it's actually driven the adoption and desire for digital solutions from our clients. And I also agree with Kevin, actually, that by automating some of the manual processes, by putting self-service in the hands of our clients, what we've done is we've started to create more time for our clients to step back, think more strategically, and think about what they would do to maybe use different and other digital solutions that we may have available as a banking community for our clients, or indeed to get involved in developing those with us. So one of the things that I've definitely seen has got traction over this period has been that desire for co-creation with our clients to work with us, and actually with vendors that we work with as well, to determine, what is the problem statement here? What is the solution we need to solve? And how do we do it in such a way that it doesn't become a massive project for our clients, and put that technology in the hands of our clients?
Absolutely. Well, thank you very much, Karen. Thank you all for that. We're going to now actually test this out with our audience. And see if the audience has been swayed by what you've said, or if they have different views, or who knows. We're going to have a little poll anyway. So for our audience, you'll have 20 seconds to respond to this poll question. And the question should be coming up now. So the question is, how would you view the change in the role of the treasurer over the past year or so? If you want to start saying nothing has changed, you can say the basics haven't changed, but the focuses have changed over the last year or so. Or indeed, the role of the treasurer has changed fundamentally over the last year or so. So let's just see as the numbers are coming in. We'll just wait for a moment to see those. We're going to have 20 seconds, as I say. A few more seconds yet. It's looking to me like there's a clear leader coming in. Let's just see. Yeah, still a few more coming in, and I think we're going to close the poll in just a moment. So is the poll closing? Yes, so I think we're going to be able to reveal the results to you of the poll. So 89%, oh, no, it's changing still. Is it revealed on the screen yet? It should be, because we've gone way over 20 seconds. So the leader is the basics haven't changed, but the focuses have, and that's 88 or 99%. It keeps wavering. I'm not sure why. Nothing has changed. 10% are saying nothing's changed at all. and 2% are saying that the role of the treasurer has changed fundamentally. So perhaps we'll find out later through chats and discussions over the next 14 days while the platform remains open, that 2%, what you think has changed fundamentally, because I'd like to hear a little bit more about that, because I'm sure there's some interesting stories behind that. But yeah, the focus, clearly people feel that that has changed over the last while. So thank you very much for participating in that to our audience. And a reminder, Q&A, if you have any questions, do put them in as we continue the conversation with our panelists, because you've got your chance now. They're all here and willing to answer questions. So do let us know. Now, I'm just going to ask a special question to Bente and Viktor, just from a treasurer's perspective. Over the last, since COVID started, just on any level whatsoever, what was in your role, what was the biggest surprise to you? And if I could start with Viktor, I know I'm springing this on you, but what was the thing that stood out to you over the last 12 months that made you think, oh gosh, really?
Yeah, I think I don't want to overuse the term kind of agility and adopt. But we have an example similar to Bente. So, I mean, we never had to worry about cash, right? So this is the fundamental principle of a business, that we have to accumulate our cash reserves. And we had all the projects around automation, digitalization, whatsoever. From a strategic perspective, we had the usual kind of 3 years treasury roadmap when it comes to systems. And when it has come to our ability to prepare cash forecast, then we were kind of almost naked there. So we had to implement something very quickly. And the learning from that if you have the right objectives, you have the right people, and you have the right focus in terms of how you want to deliver something, then you can do it quite quickly. So I mean, we kind of laid down the fundamentals similarly to Bente. So we had like 12 weeks cash forecast in 1 week, and we have that implemented in another week without any kind of major system implementation or any kind of digital budget behind, just doing the same things different, or use the same data set that was available before for a different purpose.
Thank you. And just quickly over to Bente then, because there's some questions coming in. We'll move to them in just a moment.
I think it's the people, the people within Rentokil, they absolutely pulled together in the same direction. A lot of people made sort of personal sacrifices as part of the pandemic. We actually realized quite quickly that we had a lot of cash, and because we were an essential service, we continued to get quite a lot of cash in. So we haven't been that hit, but it was just at the time when everything was locking down, everyone was pulling in the same direction, and that was really nice.
It's nice to see, and I think that we've seen a lot of that around the place, and a lot of kindness has come out of this difficult time. But I'm going to move to some of our audience questions, if I may now. One here is, what is the role of a bank versus a technology provider in helping a corporate with cash management, or are both almost the same these days? Could I have maybe a very brief response from Karen and then from Kevin?
Yeah, so I kind of don't see them as different. Certainly at Barclays, and I know amongst other bank colleagues, we've been really on a journey around digitisation because we're seeing the demand for our clients, and we've been doing that for a few years now. What we typically will do is work with our clients, I mentioned earlier, to kind of co-create around the solutions they're looking for. Now, that may mean something that we actually provide and build ourselves, or it could well be that we actually work with a specialist provider to actually bring that together to bring the best solution to bear for our clients. I think it's important that as bankers, we don't think we are the only people that can build technology and deliver it to our clients. And in fact, that probably isn't the right way forward. And I'm sure Kevin will probably agree with that view, actually.
Yeah, absolutely. I mean, from our perspective, there was a lot of talk 10 years ago, five to 10 years ago, around the banks versus the fintechs and who's going to win. And I think everybody's sort of grown up and realised that we're complementary, not competitive in most respects. We work really closely with our banking partners, including Barclays, in order to make sure, firstly, that we can deliver good product to the market in conjunction with them, but also to make sure that adequate data and information is passed through so that the bank understands what's going on with clients that are using our platform, and that clients get the appropriate credits for using their banks through us. So it's a big market. There's plenty of opportunity for everybody, and I think it would be naive of either the tech sector or the banking sector to think that they could go and sort of take things forward without collaboration.
Absolutely.
Well, I hope that's answered that question for our audience. Thank you both for that. The next question I've got is, the profile of treasurers increased last year as they maintained liquidity to support their business. How can treasurers capitalise this increase and sustain it, so this increase in profile? Would Bente or Viktor like to respond to that? Any thoughts on how we can capitalise on that raised profile? You're laughing, Bente. Tell me more.
I'm not sure that the profile has necessarily increased. I think we've been up there since 2008. We've been doing these things for a long time, and it was just kicking things into action. It was getting the book off the shelf and say, oh, this is where we go to, and off we went again. We are the first place they go to when something like this hits, and we are prepared.
Indeed, and so it may be difficult to increase it, but I have noticed that a lot of people saying, we had our business of treasury research last year, of course, and people saying sometimes the barrier for them to progress in their career is more having those kind of strategic influencing skills, building relationships and communications. Now, obviously not anyone on this panel, but other people, struggling with those kinds of areas. And this seems like the perfect opportunity now that chief execs and CFOs are wanting to talk all the time to you. Maybe for those people who've struggled a bit, there are opportunities for them to increase their profile. Viktor, do you have any ideas?
Yeah, I think, Caroline, I just wanted to build on what you said. So I think now our role has changed again, to the extent that we have to allow business units and the management of the companies to get back their focus on the business itself. So I think all business units have sacrificed a lot when it has come to focusing on financial matters in order to protect the companies. I think now our role is to really to let the ball roll and allow these people to focus on the business.
Yeah, thank you very much for that, both of you. Another very quick question: what are the key technology solutions that treasurers should be looking out for, e.g. CBDCs, more granular data, more straight through payables, receivables, etc.? Maybe I could just ask either, maybe start with Kevin. Have you got some quick responses on that one before moving to Karen?
Fixed term funds, obviously. No,
objectively speaking.
No, so I think it sort of goes back to that resilience point for us, which is solutions around visibility, around liquidity, around credit, really trying to make sure that whatever treasurers can do, whatever they can, leveraging that technological ecosystem in order to make the company as resilient as possible, as Viktor says, so that it can get on with its normal business without having to worry too much about what's going on at the core.
Yeah, absolutely. Karen?
I would totally agree. I would definitely focus less on the technology itself and much more on actually what is the problem we're trying to solve, and then talk to your tech partner or your bank partner around what the problems are, and they should be able to talk to you about solutions. You should be less worried about what an API does and how it works, and more about what actually can it do to support you from a solution and problem solving perspective, because it's not going to solve everything, right? So that would certainly be my way of thinking about this.
Thank you very much. And one last question before I come back to sum up with you all finally. This question, maybe one person could take this. FX became more aggressive due to the recent events with COVID and the price changes. Do you see any other form of FX to be founded other than spot and forward? Is there anyone who's passionate about a quick answer to that one, please?
Shall I just do a quick one for just from a personal perspective within Rentokil?
Right.
We are not massively exposed to FX because we are in country, so we don't have a lot of cross-border trade. What we are seeing more of is economies that don't have hard currency, being it's very difficult for them to buy in, say, dollars outside of the country because there's just no cash available, no tourists coming in, bringing the money in.
Mm-hmm. Thank you very much, Bente, for saving me there. Now, I'd like to just go across the four of you, 15 seconds each, with the final question, which is, in terms of the future of cash management, what would be your one message to treasurers today? And I'll stay with you, Bente.
Liquidity, liquidity, liquidity.
Thank you. Viktor.
To me, it's digitalization and upskill your competencies in the digital world if you want to be relevant in 10 to 20 years from now.
Thank you, Viktor. Kevin.
Talk to your banking partner. If you feel like you're over communicating, then you're probably communicating at about the right level. We can serve you better the more we understand your needs and challenges. Thank
you very much, Karen. And Kevin.
The future's bright. There's lots and lots of opportunity, but also the future won't look like the past. So be prepared for what may come around the corner next time. If 2020 taught us anything, it was that surprises happen.
Well, thank you so much. It's been great having you here today. Really interesting conversation, certainly from my perspective. I've learned a lot. And thank you to our audience for being here and for those great questions.